Good morning. How we doing, everybody? Happy Friday Eve. Hope everyone had a great night's sleep. Welcome to the March 7th, 2024 edition of the Premarket Prep. This being our daily session where we go over all the important news, notes, economic events, analysis, information that will be absolutely key, pivotal, paramount to maintaining profitability, avoiding throwing your account down the toilet, right? As well as just making sure that your money is working for you. So, congratulations on being here. It's very important to be consistent, right? Invest in yourself daily. Um, Warren Buffett always said time in the market beats timing the market. It's the same thing when it comes to learning about markets. Time spent learning about markets is most important. Time spent daily diving into, relevant factors, all of that. Super, super key. Super important. Knowing what's going on will always benefit you, not just when it comes to markets, but also to making decisions, responsibly as an adult. Um, there are all these different obstacles and different kind of X factors that are thrown into the mix, especially nowadays. There's always new technology or some new conflict or some new something that is kind of shifting the dynamic in the way that we operate. So staying on top of those is absolutely essential nowadays, right? Much more essential than what it used to be back in the day. Back in the day, you go about your business, not really care about the news, da da da. You do that now, you wait a month, you wake up in a whole new world. So being locked in, being tuned in allows you to stay ahead of the curve and make sure you're providing the most value to yourself as well as to the world around you. That's how you live a great and fulfilling life. So we always want to put our best foot forward and get 1% better each session. So make sure you throw that one in the chat, signifying your intention to do just that. And I'm going to dive into the news that we have going on here today. So our top news, full disclosure, the proposal hasn't been pitched for years, but the SEC has finally adopted new rules that will require many public companies to disclose climate-related risks in their financial statements and annual reports. Lively debates and legal threats have surrounded the updated framework. Let's see. And there's still some confusion about the guidelines. On a basic level, the rules would provide, quote, investors with consistent, comparable, decision useful information and issuers with clear reporting requirements according to the agency, but not everyone is happy about the new requirements. Quote, the SEC is merit neutral. We're agnostic to climate risk itself, but we have a role to play in disclosures made by companies and that they have proper controls around those disclosures, Chairman Gary Gensler declared. It's about investors making investment decisions and what risks it poses to investors. It's grounded in materiality, a multi-decade old concept that companies disclose that which a reasonable investor would consider amongst the total mix of information. To translate, Gensler framed the new guidelines as more related to the risks that companies and investors may face from the effects of climate change versus the risks that corporate businesses might pose to the climate. However, some of the new rules in the framework do center around how companies contribute to climate change, namely Scope 1 emissions or those that result from a company's operations, as well as Scope 2, which come from energy and power bought by a company. The most difficult greenhouse gases to calculate, Scope 3, were left out of the final proposal and refer to indirect emissions from a company's product, like those produced by its suppliers and customers. Yeah, that would be very hard to quantify and try and include. Nearly half of all public U.S. companies registered with the SEC will be required to report Scope 1 and 2 emissions if they are considered material climate-related risks. Meanwhile, the controversy surrounding the new disclosures resulted in a close 3-2 vote at the SEC, with the two dissenting Republican commissioners calling the framework, quote, climate regulation promulgated under the commission's seal, in stating it would, quote, increase the typical external costs of being a public company by around 21%. Sheesh. A coalition of 10 states also filed a legal challenge to vacate the new rules, referring to them as, quote, illegal and unconstitutional. So going deeper, climate-focused investment is more than just excluding companies that have risk to climate change. It really is taking advantage of those opportunities. Quote, capital flows in this area are not dependent upon economic growth and cycles. We're seeing secular growth here that shouldn't be vulnerable to economic slowdown. I mean, yeah, going green and green initiatives are something that are a secular uptrend, meaning long-term uptrend, right? But It is dependent upon economic cycles and economic slowdowns. At the end of the day, we started, when gas was high and it was expensive for people to live. We didn't just say, okay, cool, we'll just rely on electric vehicles, right? We went out, we pumped some more gas, we made some deals with some shady characters, and we got some more petroleum under our belts. Um, as much as we want oil to go away, it's not going away anytime soon, especially in times of conflict and uncertainty, right? Because what you need is things that you can rely on. And that's what has the most infrastructure in place. So that's really where we're at with it. In terms of how this will affect companies, we'll see. I kind of trust companies to do what is in their best interest. So I feel like they'll probably fight this tooth and nail, but I don't see it materially affecting, a number of companies' stock. And if it does, we'll get some type of preliminary heads up in advance. But there's too much money involved, to really make a dent in these companies. There's no way with all the political lobbying and all of that. Like, this is just not something that I see going through, or something that will be like materially impactful, or something that there's no loophole to get around. So I don't think that it would increase the external costs of being a public company by around 21%. I don't think it'll end up doing that. I think if it does, whatever guidelines do come out, I think they'll be changed in order to basically accomplish really nothing when it comes to disclosure. I think it'll leave loopholes, because that's how everything is it's passed. They leave some loopholes for those in power in order to continue to remain in power, right? So that's kind of my default on this, and I don't have any risk. Like, oh, Adam, does that mean that it's going to be more expensive for these companies and they're going to bring home less revenue and then their stock is going to drop? It's not how I see this at all. It's one of those things where the rich will continue to be rich. So I just trust in that and let their lawyers that are very well paid work this out for them. In terms of economic news, kapow! While the Fed's restrictive monetary policy is putting pressure on economic activity and inflation, cutting interest rates too soon could cause damage. That's according to Jay Powell's testimony before the House Financial Services Committee, where he reiterated that there was no evidence that the economy was falling into a recession. It may also be appropriate to, quote, begin dialing back policy restraint at some point this year, but the central bank needs, quote, greater confidence that inflation is moving sustainably toward 2%. So this is kind of wrapping up his statements yesterday. As you guys know, he can be long-winded, but this is pretty much the gist of what was going on. So it's pretty much just, he's like, hey, at some point we're going to start cutting rates, but we don't want to cut them too soon, and we're going to continue to look at the data. And that's been his, if you had an easy button that says the same thing, that would be his easy button saying, we're going to rely on the data. We're going to cut at some point soon. The economy is fine. And we're going to look at the data, right? Twice, just so that people really understand it. But yeah, that's where we're at. So no real update from him yesterday. Market pretty much closed exactly where it opened. It was a nothing burger type of day. That chair is pretty much stayed. Yeah. So Seeking Alpha investing group leader Mott Capital Management said the Fed chair, being Powell, pretty much stayed on script, though, quote, he seemed to put some distance around the dot plot from the FOMC's December meeting. So no real update there from Powell yesterday. Just saying the same thing, stuck to the script. In terms of financials, equity infusion, there had been worries over some real estate loans and internal controls, but New York Community Bank Corp, ticker NYCB, is raising more than $1 billion from an investor group led by the firm of former Treasury Secretary Steve Mnuchin. It'll come along with an executive shakeup, including for Alessandro Danilio, who was only named CEO last Thursday. The investment is, quote, a positive endorsement of the turnaround that is underway, according to Danilo, adding that the bank now has a strong balance sheet and liquidity position. NYCB sank 42% on Wednesday before the news, and after a string of trading halts, shares resumed to end the session 7.5% higher. The stock is still down 66% year to date. Now, in terms of, let's see here, economic news, State of the Union, President Biden will deliver his high-stakes State of the Union address at 9 p.m. Eastern Standard Time, likely focusing on efforts to lower healthcare costs as well as raising taxes on the rich and corporations. The speech will give Biden a wide platform to detail his economic priorities and provide contrasting views to that of Donald Trump, who is set to become the Republican presidential candidate. What a shocker. These two guys running off against each other again. The address comes amid growing economic concerns on account of a tighter labor market and sticky inflation. The speech could also serve to, quote, reassure markets that Biden is still up to the job, said Pangea policy founder Terry Haynes amid skepticism about the 81-year-old president's ability to serve a second term. I'm just going to scroll past that. Guys, like I'm not saying I like one side or the other, but like this is where we're at. This dude is 81. Go enjoy your remaining years. Like what? I don't understand it. So he's gonna be what, 85 or 86 if he gets reelected by the time his term ends. Dude is almost 90 years old. Uh, Anyways, today's markets in Asia, Japan were down 1.2%, Hong Kong down 1.3%, China down 0.4%, India up 0.1%. In Europe, the FTSE in London down 0.1%, Paris up 0.2%, Frankfurt flat, the Dow up 0.1%, S&P up 0.2%, basically flat, Nasdaq up 0.4%, crude down 0.9%, gold up 0.2%, Bitcoin down 0.7% to 67K. Today's economic calendar, jobless claims at 8:30 a.m. We've got Powell at 10. Powell again? Powell nonstop this week. All right. Well, we might end up getting another chop fest here, depending on what Powell ends up saying. What else is happening? NVIDIA within a whisker of adding $1 trillion in market cap this year. Crazy. Absolutely crazy. It's March for anyone who forgot. Sheesh. $1 trillion in market cap this year. Wow. Dutch government striving to keep ASML in Netherlands. NTSB chief, Boeing, ticker BA, still hasn't provided details about blowout. Man, if there weren't like two companies that made planes on Earth, there's no way Boeing would still be in existence. Imagine like you have all these issues with planes. They're like, hey, what happened? You just haven't responded for weeks. Who's allowed to do that and still function? Tesla, ticker TSLA, falls as Morgan Stanley warns the bear case is in play. Bayer wins latest jury trial of a Roundup weed killer. Enbridge sees Canadian pipeline maxing out capacity in 3 to 4 years. Guyana dispute. Hess slips as ExxonMobil confirms arbitration filing. Apple bans Fortnite maker Epic Games developer account. Wow, this battle with Epic Games is really, really heated up. Victoria's Secret, ticker VSCO, VSCO, plummets on expectations of a challenging Q1. And then Jolt report job openings roughly stable in January, quits rate slips. So that's where we're at with things. Someone asked me, 2 days ago, they were like, yeah, are you worried about Tesla as a company? Are you worried about Apple? I'm not worried about either one of them. I think they'll both find their way. They'll find their footing. I love seeing them fall because at some point they're going to rip back up, right? This isn't like a Carvana or a Peloton or something like that, where these companies can go out of business, right? Tesla's never going out of business. Apple, obviously, never going out of business. So, it's not like I'm ever worried about this. I'm excited because that just provides even more opportunity here for when they do get that rip up, because we all know how they move. Apple, big mover. Tesla, big mover. So sell down, sell. And in the meantime, we're going to keep making trades, leveraging our money, multiplying our money. And then when those longer term downtrends break on Apple, break on Tesla, we buy some nice leaps and we let our money work absolutely triple time for us in the background. We live our lives and then we come back when we see Tesla's reach new all-time highs, right? Apple reached new all-time highs. We can look at our bank account and look at all the commas and say, well, just like they say on Babe the movie, right? I always say this as a joke for myself because I was obsessed with Babe the movie. You can look at that account with all those commas and say, you did good, pig, right? So you might be like, Adam, call yourself a pig. I love the Babe movie. That was the one. Anybody around my age, you probably had a VHS tape that you were obsessed with. That was mine. And like my grandma still talks about it to this day about how much I wanted to watch that movie. So anytime that I like make a great trade, even though it might be sort of degrading, I'll just look and be like, you did good, pig. So anyways, we're all out here just trying to do good. And you did something by being here, investing in yourself and getting 1% better. I'm excited to, see what the rest of the week has for us. If it's chop, we'll remain patient. If there is a good opportunity, for darn sure we'll be there to leverage it, just like we did with AMD, NVIDIA, Amazon, SPY, right? You name it. Marvel, knocking them out the park. Let's keep doing that. Have a great day, everybody. I'll see you back here tomorrow for our next session. Peace.